We often treat the stock market like a giant casino or a complex weather system beyond our control. Every single day, trillions of dollars move through a global network that most people use, but few can actually define. Yet it is actually the most logical machine ever built to value human progress. Understanding it isn't about picking winners. It's about understanding the fundamental engine of the modern world. The primary hurdle for most people is the language of finance. We hear terms like market caps, short selling, and indices, which create a barrier to entry. This complexity leads to a common misunderstanding that the stock market is just a digital scoreboard where numbers go up and down at random. In reality, the market is a massive, real-time auction house that solves a very specific problem. How do you give a company the money it needs to grow while giving the public a way to share in that growth? Let's try to understand this through a simple use case. To understand the market, we have to start with a single company. Imagine a successful local bakery. The owner wants to open 100 new locations but doesn't have the cash. They decide to go public through an initial public offering, or IPO. They divide the ownership of the bakery into millions of tiny pieces called shares. When you buy a share, you aren't just betting on a number. You are buying a legal claim to a tiny portion of that company's assets and future earnings. The stock market, the actual exchange like the New York Stock Exchange, is simply the digital floor where these shares are traded. Think of it as a giant, automated ledger. Here is where it gets interesting. The price of a stock is not set by a central authority. It is set by the bid and the ask. If more people want to own a piece of the bakery than there are people willing to sell it, the price moves up. If news breaks that the bakery is losing money, owners will lower their price to get rid of their shares, and the price moves down. This happens millions of times per second. This constant movement isn't chaos. It's the world's collective intelligence trying to figure out what a company is worth at this exact moment. Take a company like Apple. When you buy a share of Apple, you aren't just hoping the stock price goes up tomorrow. You are essentially hiring Tim Cook and thousands of engineers to work for you. If Apple sells more iPhones and becomes more efficient, the value of your tiny slice of the company increases because the company's total earnings have grown. Another example is Amazon. For nearly 2 decades, Amazon made very little profit, yet its stock price continued to climb. This is the part most people overlook. The market doesn't just price a company based on what it earned yesterday, but on its potential to earn money in the future. Investors were buying shares because they believed in the infrastructure Amazon was building for the next 20 years. Finally, consider a company that fails, like Blockbuster. As streaming technology changed the landscape, the market acted as a giant weighing machine. Investors saw the future earnings of video rentals disappearing and sold their shares. The stock market effectively reallocated that capital toward newer, more efficient companies like Netflix. The stock market is more than just a place for the wealthy to grow their savings. It is the primary tool for retirement for hundreds of millions of people through pension funds and 401ks. When the market grows, it represents a general increase in corporate productivity and innovation. For the economy, it provides liquidity. Because you can sell a stock in seconds, people are more willing to invest their money than if it were tied up in a physical building or a private contract. This flow of capital is what allows startups to become giants and what funds the research for new medicines and technologies. On an individual level, it is the only mechanism that allows an average person to own a piece of the most powerful corporations in the world without having to start a business themselves. It turns consumers into owners. The stock market is a global, real-time auction that converts the world's collective expectations about the future into the prices we see today. Thank you for watching. Subscribe to Quantum Brief for clear, thoughtful explainers on technology and the future.